Greetings, everybody. Welcome to Liberty Call. Today is Thursday, June 15th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Looks like the market took the date or the information from the Fed yesterday and ran with it. Everything was well over 1% up for the day. And looking across the globe, not so much in Europe, but the Asian markets. And then, like I said here, everyone was excited that the Fed paused. So we'll see. I mean, basically, what Fed Chair Jerome Powell said was that we're pausing now. We'll probably raise rates, one or two more times this year to get the terminal rate up to, 5.5 to 6, somewhere in that range-ish area. So we shall see what happens. I know a lot of people out there are cheering on cutting rates, which I don't think that would help the inflation numbers going forward. But, there's always hope. All right. Well, if it's your first time watching Liberty Call, I'm glad you're here. Please give me some thumbs up, likes, shares, subscribes, follows. And let's go ahead and jump into the numbers for today. The Dow Jones was up 1.26% for 428 points, closed at 34,408. S&P 500 was up 1.23%, closed at 4426. NASDAQ up 1.15%, closed at 13,782. The VIX was up today, 4.47%. That is a little strange. It's currently at 1450. So to see the VIX up 5% while everything else was up is a little odd. Let's see here in Canada, they were flat, up 0.06. Brazil was up 0.14%. Mexico was up 0.28. Over in Europe, Germany was down 0.13%. The UK was up 0.34%. France was down 0.51%. Netherlands was up 0.16%. Spain flat at down 0.02%. Italy down 0.28%. Switzerland up 0.22%. And Portugal up 0.57%. Both Russian exchanges in the green. MOEX up 1.27%. And the RTSI up 1.79%. And the overnights in Asia, the Nikkei in Japan was flat at down 0.05%. Australia was up 0.19%. New Zealand up 0.53%. In China, the Shanghai was up 0.74%. The Shenzhen Composite up 1.81%. The China A50 up 1.82%. TJ Shanghai up 0.94%. Hang Seng up 2.17%. And the Taiwan weighted up 0.56% for the day. So, like I said, most traders, I guess, took that as good news that the Fed is slowing things down. I know they would hope that they would slash rates down to zero because that makes corporate America and Wall Street makes their numbers look so much better. But I think for the rest of us, we'd like a little less inflation. So we'll see where that goes. All right, let's go to today's market recap. Stocks in rally mode as tech keeps on marching. All right, the S&P 500 saw a significant jump on Thursday, driven by the strong performance of big tech stocks as Treasury yields declined following softer labor market data. The index surged, led by Microsoft and Facebook, which both experienced more than a 3% increase in their stock prices. The jump in tech stocks coincided with the drop in Treasury yields after data revealed that the U.S. jobless claims numbers reached the highest level in over 2 years. Approximately 262,000 people claimed unemployment insurance in the week ending June 10th. Remaining unchanged from the previous week, but surpassing economists' expectations of 245,000, indicating weakness in the labor market. While expectations of the Federal Reserve resuming interest rate hikes in July still prevail, investors are hesitant to price in another rate hike for the year, as reported by Investing.com's Fed Rate Monitor tool. The Fed revised its outlook on rate hikes, projecting 2 additional hikes for the year, which would increase the Fed funds rate from its current level of 5.1 to 5.6. Despite the signs of labor market slack, the latest retail sales data surprised on the upside, indicating that consumer spending remains strong. The positive consumer sentiment supported the broader market, and with healthcare stocks like CVS, Zoetis, and United Health rebounding from previous losses driven by concerns about rising costs. In the energy sector, there was a notable movement with prices rising over 1% as sentiment around oil prices received a boost following China's decision to cut interest rates overnight. China, being the world's largest oil importer, stoked optimism about the economy and oil demand. Companies like Qatar Energy, APA, and Marathon Oil were among the top gainers in the energy sector on the day. Additionally, there was a notable deal notable deal news as Patterson UTI Energy and NextYear Oilfield Solutions agreed to merge in an all-stock deal worth $5.4 billion. This merger adds to the recent activity in the energy sector, highlighting the ongoing consolidation and strategic moves taking place in the industry. All right, so jobs numbers are, like I said, like I've been telling clients during meetings in the, here recently, is that, the jobs numbers are a lagging indicator. So I wouldn't exactly jump up and down, because those numbers still look pretty good. I mean, even though they are at a 2-year high, the numbers are still, quite excellent by, normal standards. All right, next up, motor vehicles building materials lift U.S. retail sales in May. U.S. retail sales rose unexpectedly in May, indicating that consumer spending on motor vehicles and building materials could help prevent an imminent recession. I don't know if that's true. The data released by the Commerce Department showed a 0.3% increase in retail sales, exceeding economists' forecasts of a 0.1% decline. This follows a 0.4% rise in April. On a year-on-year basis, retail sales were up 1.6% in May. The report, which focuses on goods and does not adjust for inflation, indicates that consumers are still willing to spend despite the higher cost of living. The tight labor market and strong wage gains have supported consumer spending, while the easing inflationary pressures have helped sustain purchasing power. Additionally, accumulated savings from the COVID-19 pandemic have provided some households with extra resources for spending. I doubt that most people who got stimmy checks back 2-3 years ago have any of that money left. I would be shocked if even 5% of them had any of those dollars left. The strong demand in retail sales, particularly in the automotive sector, with a 1.4% increase, suggests that the Federal Reserve may consider raising interest rates in July. Other areas that experienced gains in sales, including building materials and garden equipment supplies, furniture stores, electronics and appliance stores, and hobbies. Online retail sales saw a modest increase of 0.3%. However, cheaper gasoline prices led to a decline in receipts at service stations. Economists view dining out as an important indicator of household finances, and the rise in food services and drinking places sales by 0.4% reflects positively on consumer spending. While retail sales showed resilience, other data revealed that initial claims for state unemployment benefits remained high and unchanged, indicating that layoffs could be on the rise. And I think I covered an article in the last 2 weeks that we've had more layoffs this year than we did all of last year. So yes, layoffs are picking up steam at this time. However, economists continue to perceive the labor market as tight. The U.S. economy has managed to withstand the Federal Reserve's rapid monetary policy tightening since March of 22, with 5 interest rate hikes totaling 500 basis points. That's 5%. Although the Fed did not change its policy rate in its recent meeting, projections suggest that borrowing costs may still rise by up to 0.5 percentage point by the end of this year. The positive retail sales data led to gains in the stock market, with the S&P 500 and NASDAQ reaching 14-month highs. However, manufacturing output only saw a modest increase of 0.1% in May, compared to a surge of 0.9% in April. Higher borrowing costs and a shift in spending from goods to services have limited the growth of the manufacturing sector. Despite this, surveys from the Federal Reserve Banks of Philadelphia and New York showed an optimistic 6-month business outlook for goods producers in June. Overall, the unexpected rise in retail sales suggests that consumer spending remains resilient, potentially preventing a recession in the near term. The Federal Reserve will closely monitor employment and inflation reports to determine whether to raise interest rates further in the coming months. So basically did what they said they were going to do as far as rates. A little bit of a surprise that people are still spending as much. I know in the consumer spending chart that I cover with clients, that thing is still just going up and up and up. So we shall see what happens. All right, last on the docket comes from our friends over at Mises Wire. It's titled "Wall Street to the Fed. Inflation is over. Give us more easy money." And this was written by Ryan McMacken. All right. The latest data released by the Bureau of Labor Statistics indicate that price inflation in the United States decelerated in May, with the lowest year-over-year increase in 26 months. The CPI inflation rose by 4% year-over-year in May, down from April's increase of 4.9%. That marks the 27th consecutive month with inflation above the Federal Reserve's 2% target. On a month-over-month basis, inflation rose 0.1%, a decrease from April's gain of 0.4%. The slowdown in inflation can be attributed to deceleration in energy, gasoline, and used car and truck prices. However, food prices continue to rise, reaching levels not seen since the late 1980s and early 90s. Food prices increased by 6.7% year over year in May. Overall, energy prices fell by 11.7%, with gasoline prices dropping by 19.7% over the same period. Shelter prices, which have seen significant growth in recent years, slightly slowed down in May with an 8% year-over-year increase. Despite the overall slowdown in inflation, real wages continue to decline for the 26th consecutive month. Average hourly earnings increased by 3.4% year over year in May, while price inflation stood at 4%, resulting in a decrease in real wages. When looking beyond food and energy, the core inflation rate, which excludes these volatile components, only slightly slowed down and even accelerated on a month-over-month basis. Core inflation fell to 5.3% in May, down from April's rate of 5.5%, but still close to the 40-year high of 6.6% reached in September of last year. The market interpreted this slight deceleration in price inflation as a victory and expects the Federal Reserve Federal Open Market Committee to pause on interest rate hikes. However, it remains uncertain whether the Fed has the appetite for further rate hikes, as the target federal funds rate is already at its highest level since 2001. The FOMC's decision will be revealed at Wednesday's. Yeah, we already covered that. It was revealed yesterday. The Fed's interest rate policy and its impact on inflation have been the subject of debate, with some arguing that the Fed can address inflation by raising interest rates. Others believe that the central bank's longstanding policy of forcing down interest rates has contributed to monetary creation, asset price inflation, and consumer price inflation. The Fed's recent minimal adjustments to interest rates are seen as an attempt to address the political problem of price inflation while not significantly disrupting markets. Overall, the recent data indicates a slowdown in inflation, although challenges remain, particularly with regard to food prices and declining real wages. The Fed's future actions and their impact on inflation will continue to closely monitored by market participants. And as you know, this obviously was written before the Fed announcement yesterday, but they did pause, which was not a surprise. But, there is going to be that tug of war over the next probably 5 weeks to see whether or not the Fed will raise rates next month at the meeting on July 25th and 6th. And then the next meeting after that is September 19th and 20th. So I imagine, unless something weird happens, they'll probably stick to their guns. Chairman Powell is, basically done that all the way through, even with, the market downturn last year due to rates going up. And, so we shall see what happens. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.